Yo, what's up? This is Patrick from TSH FX Institute, and today we're gonna look what happened to the Nasdaq this week. So let's go into the charts. Let's go. So as we all know, I have something here that I want to show you guys. This is how we read structure. So this is actually called support and resistance. Here the bottom we have our support, and here at the top we have our resistance. So whenever we get 2 or 3 touches, or the more the touches are, the stronger the level will hold, and that means that there will be a reversal back into the range. So as we can see, the market will start here at the support and move into a resistance, and then from the resistance there will be a change back to the support, and this is how the market moves when the market is ranging. So whenever you see the market is consolidating, you must know that it's also tradable, whether it's in the 4-hour, 1 hour, 15-minute or smaller time frames. So these are our areas of interest. And usually what the market maker do, they will, this is where they stop hunt at these areas. They stop hunt at these areas because they know a lot of traders are trapped there, a lot of orders are there, and they know that they can give us also a false move out of that range so that the retail traders can take it. And usually these are long candles or fast and very aggressive candles which go the opposite way, just to make us chase the market and take the trade. So that's also part, or that's the fear of missing out a trade. So let's dive deep into the charts. So as we can see, this is Nasdaq. This was what was happening. So this was our support area, and this was our resistance area. As we can see, the market came to the support, and then the market bounced back to the resistance. From the resistance it came back, got some support here, and then the market is now on its way to the resistance. So what we can see is this week started around here, and we were at a previous support level. We were at a previous support level, and usually the market, I told you guys that the market will give us a false move in order for us to chase that trade. And some traders that are using other strategies or indicators or robots, like this kind of candles, is the systems or those robots will tell them to sell, and that's how they get trapped into the market. So this is the 1 hour chart. This is very clear, similar to the pattern that I just showed you guys. So let's dive deep into the 15-minute chart. So this is a 15-minute chart. Remember, in the beginning of the week, just go check in our previous video, we were actually analyzing the market from Monday. So this was Monday, and I told you guys that on Monday the market will consolidate, and then the market will give us a stop hunt low, and then the market will give us the real move. So how do you identify what's the stop hunt and what's the real move? The stop hunt is basically fast and aggressive, and the real move is slow and steady. So let me show you one thing, how we can let me show you something here. if we go into our, let me say, our 4-hour time frame, for instance, we go into our 4-hour time frame, we look at the market on a bigger time frame, we will see this, right? So I told you guys that the market will consolidate in the first 8 hours of the week, and this is where we draw our lines on the first. Okay, let me just explain a bit deeper. What we do is we take the first 2 candles of the week, Sunday going into Monday, which is these 2 candles. You draw a line on the top of the week, you draw a line on the bottom of the week. This is your weekly accumulation range. From there on, you will see the market will push out aggressively, and that's where you will be able to know that this is a stop hunt, because those candles are long and they are very fast and aggressive. So this is one example. So this, we call it our stop hunt. This is our stop hunt. This is our stop hunt. We call it our stop hunt. This is our stop hunt. This one, okay, for this one, let me delete this one. This one, we call it our stop hunt. And we can see, I told you guys that at the previous low, the market will walk this low. It can be 25 to 50 pips, or it can be more, depending on their targets, depending on the market maker's targets. So what happens at this area is, we can see we have a clear accumulation and a proper stop hunt. From there on, we now decide that we are going to take our trade. So this is also a strategy that we use also for swing trading, because it is very powerful. So as you can see, the market is really pushing up. There is a lot of momentum here, and you can see the market is basically might go to this area where there is a resistance, so the market can push into this range. Market can push to this level, and then the market can probably pull back and end the week in a consolidation to trap the traders for the next week. So we have our accumulation, we have our stop hunt, and then we have our real move. So you also have to watch the news events. You don't have to trade the news events, you just need to know what's happening in the market, because the news, the fundamentals, they also affect the market, and it can also affect your trades. So this is what happened. This was an event. Let me just check it out. What was the name of the event? The name of the event was FOMC. Yeah, it was a FOMC statement. So we can see, if we just look, we were having very high impact news. It was, I think it was on Tuesday. Yeah, I think it was on Tuesday or Wednesday. Yeah, it must be Tuesday or Wednesday. We had very high impact news, so we have to be careful whenever there is high impact news. Let's rather stay out of the market just to protect our capital. So we will go into the smaller time frame again. Let's go into the smaller time frame. Okay, so on Monday we took this trade. So I won't really explain what happened here. You can just go on my page and go check what happened. So this was the trade we took. You can see it's the same pattern in a smaller time frame. Accumulation, stop hunt, and then the real move. This is also the same pattern: accumulation, stop hunt, and then the real move. So we took a trade right here at this candle, and then our profit was here, but we wanted to hold it for a long period of time. So we had our take profit 1 here, our take profit 2 was right here at this area. So we wanted to trail a few stop losses. We actually wanted to hold few trades, but we were checking, there was a lot of high impact news, so we decided that let us just trade whenever there is no news. So this was Monday, and this accumulation range, it is now let me say it's no, this was Monday, and this was Tuesday, this was Wednesday, so this was the news event. So this was the news event, so we can see the news event. This was the news event. So as we see, like the news event, these are very long candles with lots of momentum. These candles can destroy your account, can destroy your equity, because a lot of us, we don't really know how to trade news. So it's better for you to stay out of the market when there is a news event. So this was actually the low of the day, and then the market came down at the low of the day to walk the low of the day. And I told you, the long candles, those are false move. See, so many traders took this as a breakout to sell to these areas of support or to these key levels, but it failed, you understand. So we must be very, very, very careful and always watch for high impact news. So this was the low of the day. The market came to walk the low of the day, and check even if you count the 15 minutes, this was just 2 bars, which was like 30 minutes, and then the market shot away, and this was the slow move. And I told you that we are only trading when the market is on a slow move. We don't trade these kind of candles. These are to induce traders to take a position. We wait for the market to give us this kind of signals, and then we wait for confirmations, and then we enter the market safely. So again, the next day we can see this was the pattern, our powerful pattern. This was the accumulation range, and then stop hunt low, and then the market gave us the low of the day. As we can see, the market gave us the low of the day, and then the market came back to the low of the day, and then the market walked this low. As you can see, a lot of traders were taking this as breakout or signals to the downside, so they were caught in here. So some traders had their stop losses here, and all their stop losses were hit, and this is our pattern against the retail traders. So it's accumulation, stop hunt, and then we get the real move. You can see the real move is slow and steady. So again, on this day, this was the beginning of the day. You can see we had accumulation, but the market was in a tight range where there is only accumulation. So the market decided to push more up because the market is on its way to a resistance zone. So market is on its way to a resistance zone. So we will have to see what's going to happen next week. So this is one good setup that we took. So we took an entry right here, and our stop losses were here. Once the market came here, we trailed our stop losses here to the entry point. So, and when the market broke at this area today, we decided to move our stop losses to this area. So we are waiting for the market to push to these areas. So let's wait and see what's going to happen with the market. If the market pushes down, we will just wait for the market to come to these areas, and then we will manually close our trades and call it a week. So one thing is, you don't have to be greedy in the markets. You must wait for the market to show your pattern, then execute. So this was Nasdaq. So this was a very nice trade we took. So let's see what's going to happen next week. I hope you guys enjoyed this video. All I'm asking for you guys to do is just to like, can comment, and most important, subscribe to this channel for more updates. Thank you.